Hello, traders out there in Traderland. This is your installment of the weekend edition. My name is Dez, president and founder of Grok Trade here at freeonlinetradingeducation.com. And this weekend edition is good through Sunday, June 17th, 2012. On Friday, markets bullish, up 0.9% on the Dow. The S&P up more than a percent. Same on NASDAQ and Russell. Banks also high. VIX dropping 3%, still above 20 though. Gold barely in positive territory. Other commodities down. US dollar down quite a bit on this bullish activity we had on Thursday and Friday. Trend at 0.60 again. Let's talk about this pop that we received. It has a lot to do with Greece. And on Sunday, they come out with a major vote. And the short version is simply this. You have the right side of politics and the left side of politics taking place over there. The right side says, let's stay in the Eurozone, and that's what we want to do. Even our administration, which the president here is left, is wanting Greece to stay in the Eurozone. Some significant ramifications if they decide to drop out. In Greece, the left side, which many say almost have a communist type rhetoric, is saying, nope, you know what, we're going to pull ourselves out of the Eurozone and basically default on the debts that we have. And they certainly do not want to lower taxes or cut spending like the right does. So that's the issue. If the left do win the election, that's where we're going to see some worldwide banks coming in to help save the markets, because it's going to bring some turmoil to this. All eyes will be on that, by the way. However, the hope is seen right here. Now we see this falling wedge on the S&P daily. We have this pop. We go into a bullish pennant or a high base, and then boom, boom, nice little pop, bang, bang. And you'll see that we stopped right here at this line that we've had for a while, 1342, and that's that swing right there. Major swing coming across, and we paused right there. But we closed pretty strong at the end of the day. And the question is, will we get any follow through? So why the pop? Why two significant pops? It's because one of two things are going to happen. Either the right is going to win, and that should help the markets as a whole, or if the left wins, what's going to happen is you're going to have people wanting to come in to save the day, and that should bring the markets higher too. However, I am mostly in cash at this moment. I don't like to play around with uncertainty. I like to be on the sidelines during the uncertainty, let the news happen, and then I'll play what I see in the markets. But let's talk about what we're seeing in the technicals. Let's go over here to a weekly chart. Weekly chart, we have this bounce. So we had this drop and a bounce taking place. It would behoove us right now to also pull a fib here, go from the high of this fib down to the low. And I think we're going to run into some area right here, about where the 20-week moving average comes in, but the 61.8% Fibonacci, which puts us around 1358 area, 1358. So it's an area that we'll want to be watching for, but I can certainly see that as being an area of resistance. This is called a bear pullback. I can see us getting right here, hitting our head, and then crashing down. That is the pattern that we have going right now. However, if we continue with this higher swing high, higher swing low, that means we should blast through. I personally do not think that the economy is in such a shape to start making new annual highs. So I think that we have a better chance of stalling before we get to 1409, hitting our head in this area, and then dropping if we do rally. If we don't rally, I see us stopping around this 20-week moving average, hitting our head, and then making a nice leg to the downside. But this, all eyes are on the monthly chart, gang. This monthly chart in the S&P, we're in this rising wedge. So just focus your eye on this blue line coming higher and this blue line coming higher. It's a big rising wedge. If we do start to rally, this hammer will continue to move higher, but we have some big areas of resistance that we'll have to pay attention to. Let me show those to you. 1363, 1370, those two will be the next areas of resistance we'll have to contend with, and after that 1400, and then 1422 is what we're looking at. And if we hit our head there and then drop on the bigger scale, this rising wedge could start to get ugly and fast. Now listen, after the election going into next week, watch this 1299. If we go lower than 1299, in a lot of trouble. Now here's the NASDAQ, which can lead the markets. On the monthly chart, big rising wedge, nice clean looking rising wedge. We're at a support area, we're looking for a bounce, but if we break down, especially if we break down on the month, let's say if we get below 2670 or lower, ouch, write that number down. Weekly chart here, we're knocking our head at a big resistance point, and if I were to shrink this data and bring it back, you'll see right here, which is in 2007, we come across 2011 right here, and then we right now on the weekly find ourselves on the wrong side of that line that was acting as resistance, now acting as resistance again. Here's the daily falling wedge, breakout, high base. We are moving, but we're not making these new highs yet. As far as relative strength is concerned, we're below the 50-day, above the 20-day right now. On the Dow, we're above the 20 and the 50 on the Dow, and then on the Russells, we're above the 20 but not above the 50, so it looks much like the NASDAQ. And then the S&P, we are above the 20 but below the 50, so we're caught up in moving averages at best. Markets are in a lot of trouble. Let's take a look here at the banks on the daily. Banks are breaking out to the upside of a trend line on the weekly chart. It needed to do so because we're at support. We made a higher high, higher low. But check this out, we get this, what's called a dragonfly doji, stalling at the 20-week moving average. Big area of resistance right here. You can see where it's resistance here, support here, it gets chopped up there, and then resistance right here. But look at these moving averages. They're all right here together. Major area, major time for a big move to take place either to the upside or downside. Big time consolidation happening within these moving averages. And then on the monthly chart, we do not have higher swing highs. You have an equal swing high here, equal swing low. So we're in what's called a trading range between 1370 and 1850 area. We have what's called a bull pullback to a slightly rising 20-month moving average, which could be really bullish, especially so far in this month, getting us a hammer. So that could give us a massive move to the upside, especially if we can get above this 1854 region. So that'd be a region we want to watch for. Write that number down. And while we're here, let's take a look at gold. And the gold, you have a lot of choppiness. We're caught up in the moving averages again. You just got to be careful with this. Had a nice little run. Doji now. This thing looks like it's ready to drop. On the weekly chart, if it does start to drop, it's going to start breaking down of a lot of support areas. On the monthly chart, here's the reason why we have a big chance of dropping in gold. And if gold drops, you're talking silver and you're talking most commodities. But on the last month, we broke a major support line. We're still below that, and it could get ugly. Now, the only thing that we could have work in our favor here, let me draw a couple lines. We have this line, resistance, support, and then coming down. This could be a big monster bull flag. So if we do break out to the upside, and I would say if we get above 165 on GLD, that could be an area or a time for us to be looking to go long on gold, because you can get a really nice run out of this. Odds are we're going to get a breakdown here. However, if it does break out, I'd significantly be looking and taking a serious gander at going long on this. Let's take a look at Facebook, find out where we're at on Facebook on the daily. Here we were set up for a nice short, but we never did make any lows to trigger those shorts. We have a nice little pop. Usually when you get a nice pop after an up leg, you will have what's called an exhaustion run. And it's this little parabolic pop after an up leg. Things that pop fast tend to drop fast. Just keep your eyes on this. It's also hanging up to 61.8 Fibonacci. It would not surprise me to see a reversal take place right there on the weekly chart. We do have a confirmed purchase on this. What we did not see on the week was an increased pop on volume on the confirmed price action pop with the higher high, higher low. So we did not enter that. Let's take a look at Apple on the weekly. We are doing a little bear pullback. We have a bull pullback here. We pop, but we're not stepping up higher. The chances of us making a new high on Apple going on this slant, very slim. So at best a double top where you come up, smack, and then drop, or you just get this little bear pullback and then start to drop again. Best case scenario for Apple is to do that, pinch, consolidate, giving us what's called a bull flag, and then making new and higher ground. Share this video with a friend. We talked about a lot of stuff. Be sure you go and watch Mark's video on stocks, and if you speak Spanish, watch Nitza and Miguel's videos, and also if you trade futures, watch Matt's. He'll be gone all this next week on vacation, so he'll be resuming his videos when he comes back. And really pumped up about the Vegas mentorship coming up next weekend. That will get the thing kicked off. And especially for you grok grads, at the tail end of that week, the last part of June is the advanced mentorship. You want to take that very seriously and join up. Take care and very safe trading to you.